All right, let's just get right into it. Bitcoin and Ethereum. You hear them talked about all the time, right? They basically are the crypto conversation. But what is the real difference? I mean, it's got to be one of the biggest points of confusion out there. Is one just, a newer, better version of the other? Well, the short answer? Nope, not even close. They're playing two totally different games.
And this quote, yeah, it really hits the nail on the head. So many people just throw them in the same bucket, treat them like they're interchangeable. But the truth is, they have fundamentally different goals, different tech, and totally different stories behind them. So in this explainer, we're going to give you a really simple, but I think powerful way to think about them so it all clicks.
Okay, so here it is. This is the big analogy we're going to unpack for you. On one hand, you've got Bitcoin. Think of it as digital gold. It's simple, it's secure, and it's super scarce. Then, on the other hand, you have Ethereum, which is more like the world's computer. It's this flexible, programmable platform where you can actually build stuff. So let's kick things off with the digital gold. So Bitcoin, its whole value proposition, the reason people believe in it, comes from its super focused design. To really get it, you have to understand what it is, but you also have to understand what it was never designed to be. That's just as important. I mean, this comes straight from the source, right? From Satoshi Nakamoto's original white paper. The mission was pretty clear. Create a secure, shared, public ledger, the blockchain, that could do one thing and do it perfectly. And that one thing? Track who owns what without having to ask a bank or some other middleman for permission. But here's where things got interesting. The story started to change over time. While yeah, you can still send Bitcoin to people, the market really started seeing it less like digital cash you'd use to buy a coffee and more like a digital store of value, an asset you hold for the long run, hoping it holds its value or even grows. So what's behind that belief? What's driving this idea? It really comes down to this one number. This is it. This is the absolute hard-coded limit. There will never be more Bitcoins than this. It is the absolute bedrock of that whole digital gold idea. Yeah, that's it. Forever. See, unlike regular money that governments can just print more of whenever they want, Bitcoin's supply is totally predictable and, most importantly, finite. This scarcity, it's not an accident. It was engineered on purpose. It's what gives it those gold-like qualities in a digital world. It's definitely a feature, not a bug. And I love this analogy because it just perfectly illustrates the point. A calculator, right? It's perfect at one thing, math, but you can't use it to browse the web. Bitcoin is kind of like that. Its programming is simple on purpose. Its development is slow and careful, and those are intentional choices. The whole idea is to prioritize security and predictability over everything else. And when you think about it, that's exactly what you'd want from something that's supposed to be a store of value. Okay, so let's switch gears and talk about Ethereum, which is a whole different beast. If Bitcoin is that simple, secure calculator, then Ethereum is like the smartphone in your pocket. It took that basic blockchain idea and asked a really powerful question. What if? What if we could actually run code on this thing? And that question led to this, the key innovation, smart contracts. These are the building blocks of that digital factory we mentioned. They're basically little automated programs that live on the blockchain and just run on their own. The best way to think about it is like a digital vending machine. If you put in one token, then a digital item gets sent to your wallet. Simple as that. No cashier, no middleman, just code. And this one idea, it turned the blockchain from a simple accounting book into a real platform. So what kind of stuff does this digital factory actually build? Well, a massive ecosystem. We're talking about decentralized finance, DeFi, which lets you do things like lend and borrow without going through a bank. We're talking about NFTs, which are basically just unique digital receipts for things like art or collectibles. You've got stablecoins, which are tokens built to stay pegged to something like the US dollar. And honestly, that is just scratching the surface. And just to give you a sense of scale here, I mean, this isn't some small experiment. At the time our sources were compiled, there was over $55 billion of value locked up in Ethereum's DeFi world alone. So yeah, this is not just a cool idea on a whiteboard. It's a real, functioning, parallel financial system that's all running on code. So this really gets to the core of it. This quote is the perfect one-liner to sum it all up. Bitcoin is money. Ethereum is a platform. See? Bitcoin's value comes from what it is, this scarce digital asset. But Ethereum's value, that comes from what it lets people do. It enables this global, decentralized computing platform. And these totally different philosophies, digital gold versus the world's computer, they aren't just marketing. They're baked right into the technology, right into the code. And because of that, these technical choices lead to some very, very different trade-offs in how these networks actually work day to day. So let's start with security. How do they keep everything safe? Well, Bitcoin uses something called proof of work. The easiest way to picture it is like a massive digital race. All these miners are using powerful computers, all competing to solve a really hard math problem first. Whoever wins gets to validate the next batch of transactions. So it's security that's backed by raw energy. Now, Ethereum, it switched to something called proof of stake. This is more like a lottery system. People called validators lock up their own ETH as a kind of security deposit. The more they stake, the better their chance of being picked to validate a block. So this is security backed by capital.
And let me tell you, the impact of that shift from energy to capital, it was huge. You probably heard about it. It was called the merge. It was this landmark event in crypto history. And the results? According to researchers, it cut Ethereum's energy use by over 99%. Just gone. It basically solved one of the biggest criticisms that was always leveled against the technology. Their ideas about money supply are also just worlds apart. We already talked about Bitcoin's story. It's super simple. A fixed cap, period. Ethereum's is, well, it's a lot more dynamic. See, new ETH gets created to reward the validators. But, and this is the key part, a little piece of every transaction fee gets burned. It's just destroyed, gone forever. So what does that mean? Well, if the network gets really busy, more ETH can actually be burned than is created. That can make the supply go down, making it deflationary. It ties its scarcity directly to how much people are actually using the network. Okay, so we've gone through the big analogies, we've touched on the tech, but why does this all matter, like right now? What's the big picture? It matters because the whole crypto world has grown up a lot, and as it's matured, the very different roles these two giants play are becoming clearer than they have ever been before. Yeah, it's really not a debate anymore about which one is going to win and kill the other. That's kind of old thinking. Instead, the market is finally realizing that they just serve different purposes. So now investors are really choosing between two very distinct stories, two different narratives. And all of this is happening while the rules of the road, the regulations, are slowly but surely starting to take shape. So how might you think about this for yourself? Well, this table kind of lays out a simple way to look at it. And of course, just a reminder, this isn't investment advice, just a framework. For someone just starting out, Bitcoin's whole digital gold story is often way easier to understand. If you're more focused on growth, you might look at Ethereum's constantly expanding ecosystem and see more potential for innovation there. And if you're an active trader, well, you pretty much have to pay attention to both because the market's focus is always swinging back and forth between these two big narratives. And something else that's really important here is that the regulatory fog is finally starting to lift. As agencies like the SEC start to give clearer guidance, they're helping to define the playing field. By basically drawing lines in the sand between different kinds of digital assets, they're reinforcing this very idea that Bitcoin and Ethereum are in completely separate categories. And that really brings us to the final and I think most important question you have to ask yourself. It's really not about which one is better. It's about what you're actually looking for. What kind of bet are you trying to make? Are you looking for a simple, scarce, digital version of a reserve asset? Or are you looking to invest in the base layer, the fundamental operating system for a whole new digital economy? Because ultimately, the choice between them is a choice between two very, very different visions of the future.